So today we have an amazing guest. His name is Barry Chien, sorry, and he is with Summa Monday Capital Partners. So Barry, I'm really interested to learn more about what you guys are doing. We talked in the past, but I think this is something that it's interesting for people to know. So let us tell us a little bit about yourself and and what do you guys do?
Right. So Sumo Monday Capital Partners, we're a family office that invests in real estate. We currently own over 6,000 acres of land all across the U.S. A lot of the land, is in major metropolitan areas, such as, in Dallas, we're in Gunther, Crossroads, Farmersville, basically anywhere up north that is about to be developed, is next in line to be developed. That's kind of where we are, and we're just kind of praying that the tollway will cut through.
Oh wow. So kind of takes us back and tells a little bit about your journey, how you started, and with now that you are in, so kind of share with us a little bit about that.
Yeah, so it's quite interesting. I told my parents I'm going to be a doctor, and I have parents from Taiwan. My dad's a very proud electrical engineer. Apparently, my choices for a major growing up was electrical engineer or maybe mechanical, but electrical engineer is better. So that was my two choices.
And classic Asian parents, Barry.
Yeah, man. And then I told them I'm going to be a doctor halfway around freshman year, and they're like, "No, you're going to be an electrical engineer like me." And then, so I kind of was a rebel all my life. So instead, I did what all the cool kids want to do, and that's basically get into business school. And so I did just that. Got a 4.0 my freshman year in college, just because it was kind of scary not to have that, to kind of go your own route, trailblaze your own way. And so I took comfort in that and going kind of pursuing finance. And I had learned a lot in the library in college. I picked up a Harvard Business Review book that talked about private equity, about how Bain Capital would buy out a large 18-wheeler trucking rim company and get like a 8x return. And that was just fascinating to me. And sure thing, like I would, as a student, attend these buyout conferences in New York, $2,000 and just, bite the bullet and just show up. And no one wanted to talk to a college student, I found out, but learned a lot, was kind of a sponge. And sure enough, I ended up at a private equity fund of fund, buy-side firm, first thing out of college. So that was kind of one of the beautiful things that I found out is, by kind of exploring your pursuits, exploring and pursuing your curiosity, it kind of led me to a untraditional route. Most kids go to investment banking, and I kind of got into private equity fund of funds as an analyst. And so here I was talking to people on the other side of the table who were ex-McKinsey partners who are now at their seventh fund at Clayton Dubilier and trying to raise a fund, trying to get an allocation for $50 million. Mm-hmm. So I was out the bat at a fund of fund, basically allocating capital to all these GPs.
Got it. So I would say, first of all, that's gutsy, right? As an undergrad, going to private equity conferences. And secondly, what ties into that is it's difficult, like straight out of undergrad, to go work at a PE firm. It's very, very competitive to do that. And that's a fairly unusual result, right? And one thing I like to say is in order to achieve unusual results, you need unusual inputs, typically effort, right? And so thanks for sharing that, because you put that work in and got into a very, very competitive area as an analyst right out of undergraduate.
Right. I do have a question for you. So for the audience to understand, what, and for myself too, is what is private equity funds of funds?
So private equity fund of fund is a broad umbrella that includes venture capital. So we allocate to venture capital. There's special situations, which is like kind of like turnaround. If a company gets distressed, these guys kind of specialize in kind of investing and buying them out and kind of getting their hands dirty. There's also we had a lot of mezz funds come through. And '05 to '08, there was a lot of buyout funds. And so that kind of was the boom period for buyout in '05 to '08. Kind of VC had its run, and people were trying to avoid VC at that time. And then in '08, I had 3 job offers. Having consulted in private equity to New Mexico State Investment Council, some of the largest private equity programs, I had an offer to consult for CalPERS for their private equity program, and as well as the Sovereign Wealth Fund in Kuwait Investment Authority, and then in what was the third one? Oh yeah, Partners Group in Zug, Switzerland. I didn't even know where that was for 27-year-olds. So yeah.
That's funny. Just yesterday, I was meeting with an investor of mine, and he was the COO at a company that was owned by Partners Group.
Well, they're huge. They're the biggest out there. So
yeah, but yeah, so it's always a small world. But let's go into kind of your investment process or due diligence process. So when you are at Summa Monde, when you're evaluating a potential acquisition, what's that process look like? Help our listeners understand what it takes to determine what's a good investment to get into and what would disqualify a project for you guys.
Right. So, right now we're pretty opportunistic as a fund. So, we look at industrial, multifamily, and so also triple net. And it's all about that, for triple net, for example, we currently have invested in Kid City Preschool. It's a blue chip tenant. There's a corporate guarantee on the lease. And so, it's already half funded, and, we're kind of onboarding some more investors at this time. So that's a perfect example of finding a blue chip tenant. Basically, it's in Pearland, Texas. So it's kind of like a very new area, new retail, new buildings, a lot of traffic. And so we like kind of those, prime areas when it comes to triple net. And in industrial, we like to look for good partners. So we just talked to one that does build to suits for Amazon, for example. And then there's Crow Industrial. So, I mean, we just like to talk to groups that have that track record and reputation for not losing money for their LPs.
That's so funny. Our circles are converging yet again. You mentioned Pearland. So we own an A-class office building there, as well as one of our healthcare facilities is located right there in Pearland.
Wow.
Yeah.
Healthcare, is that a medical office?
No, it's not real estate oriented. We're corporate PE, but it is a freestanding emergency room in Pearland, Texas.
Very
good. Which for our listeners is south of Houston, Texas.
Right. Yeah. And so with that, one of the things that pops in my mind, and I'm sure a lot of the audience watching this, is how do you guys go about, doing your due diligence or your process when it comes to investing into a different asset class? So like if you focus on real estate and you want to go into business or you want to go into oil and gas, what is your guys' process to that?
Okay, so when I was in private equity fund of funds, first, we get a background check on the GPs. We do reference checks, and you just look at the funny thing is the first year as an analyst, everyone seems to be first quartile. Everyone seems to be, Ivy League. And so the name of the game is to find out where they're lying to you. So that's basically, the name
I
of the
like
game.
this, man. Hell yeah.
And in terms of real estate, the due diligence, we have a whole team that scours all the deals across the U.S. To the point where one of our analysts actually had to get surgery because I think he had some kind of swelling in his eye. So I mean, it's very hard. It's almost like, think about like the analyst programs in investment banking. I mean, I would say we're almost like investment bank when it comes to intensity in trying to get the deals done, because good deals have such a short fuse that we have to close like right away.
No, absolutely. So that's it's good to know. And I like what you said. That's one of the biggest obstacles that many limited partners have come across. Especially the ones that are looking to diversify in different asset class. It's like, how do you do due diligence? And I think the best thing to say is, find the GP's red flags, right, before moving on and invest in the money. So I liked what you said there is important.
Yeah, for red flags, for real estate, just to list a few, high crime neighborhood, decline in population, legal issues with the tenants, higher price than the market. So in Mesquite, we had a deal that the rent was already at market. So it's like, why would we do a value add? I mean, you're going to just charge more than the market. It doesn't make any sense. But I talked later to the Mesquite City, and they're like, hey, we could throw money at that. And that actually would have been a better idea, is to have Mesquite City involved and invested alongside of you. So that was an opportunity that I kind of missed. Submarkets, let's see, we need supportive infrastructure. Shorter term lease terms are not as good. And I would just say, my grandpa, he was in real estate. That's one of the reasons and inspirations for me to be in this field. He was, back in the day, a city guy. And at the time, there's no brokers. It was just the brokers and the city officials, right? And what's interesting is, they built some marvelous buildings in Kaohsiung, Taiwan, South Taiwan. The problem is, when I walk through the building, I'm like, why is it half empty? And it's because the fundamentals of real estate was not there. They had an outflow in population, meaning working age kids. They were kind of moving to the bigger cities, whether that be Taipei, China, the US. And the economy was not that strong. It kind of had an older, heavy industrial feel. And so the economy wasn't there to support, a well-educated white collar population. So again, real estate fundamentals 101 is key.
So back to your focus on general North Texas, or excuse me, north of Dallas. It is obviously a very rapidly growing area, economic growth, job growth, and of course population growth. But even then, there's going to be a difference between owning land that is located adjacent to or close to a proposed highway expansion or extension versus someplace that is further out. That could be the difference between making money next year versus 14 years from now, or never, potentially, depending on our time frame. So what are some of the things that you look at to say, okay, this is where we think the path of progress is. We want to do this deal as opposed to this other deal?
Unlike in equities, the interesting thing about real estate is that insider information is not illegal. So that, I talked to the city of McKinney, and they told me about, there's this highway that's going to be built in the upcoming few years, north of 380. You guys should build alongside of that. And I was like, wow, like that's kind of like peering around the corner. And it's pretty much inevitable. The tax base is going to basically build towards that direction. So I thought that was, interesting insight, is to kind of have that information readily at hand.
Got it.
Yeah, no, definitely. And so let me ask you this: with your guys' firm, do you guys also invest in business, or it's just strictly real estate, land?
So there's a real estate component, which is Summa Monde Capital. We also have a venture capital fund of fund. which is it's not that big. It's $30 million, primarily comprised of retail investors, but we are invested across the top India GPs. So I don't think I mentioned this earlier, but the partners, they're Indian American, and so they have very high end contacts to the tech community and the investor community in India. So we are continuing to invest in the funds in India. 30% of that is going to be in co-investments, basically doubling down and cherry picking the top deals and portfolio companies.
So is this a venture capital fund focused on Indian venture?
Yeah.
Got it.
That's correct.
Got it. Yeah, that's a very high growth startup and just economic growth engine there in India for sure.
Yeah. Any chance you guys will invest here in the US?
Yeah, I mean, we're looking into that right now. We have a VC partner currently in talks, and I think it's still in the early innings. We're still kind of there's different milestones that we're trying to reach, and yeah, honestly, we have a separate team that's focused on doing that, and I think they're just drinking out of a fire hose in India in and of itself right now, and so it kind of have to find synergies. What I do hear is US VCs who want to invest and get more exposure to the young consumer market in India, because they're in the 20s and it's high growth.
Yeah, a lot of energy. That's why.
Yeah, a lot of demographic tailwinds there. So what are some key lessons that you've learned from your experiences as an investor? And I mean that both personally as well as professionally, being in the investment field. What are the most important lessons that you've experienced?
I think I learned early on, when I was just an analyst, that reputation is kind of everything. The world is very small in the private equity world, and it's important not to cut corners early on, because that can come back and bite you when you're later down in the road. So you have to kind of keep things kosher, and so that's kind of number one. Number two, geopolitically, things can change in a heartbeat. And there was a period of time when I was doing business in Asia, and in Asia things are very dynamic, and that could be for good or for bad. So if you think about EB5, there was a period of time where I was doing $200 million real estate deals with 15 million in EB5, and now that's kind of dried up, and it has gone. The investment horizon has gone from 5 to 2 years. So there's a book, Who Moved My Cheese? It's kind of like that, where not that the opportunity went away, it's just that the game has changed, and so you kind of have to be on top of it.
There's always, that's the thing, you can't stay stagnant. You got to be dynamic with things, right? And then, because if you do, then you're just going to be kicked out of the game. Absolutely. So which is why it's important to be flexible and then just kind of stay up to the trends and see if it fits the criteria enough.
And a perfect example would be I have a good friend, entrepreneur professor at SMU, Professor Simon Mack. He's been a professor at SMU for decades, and all of a sudden this year he packed his bags and went to Mumbai in India to start a AI university. And I mean, either he's crazy or there's something going on there. He went to MIT, so I assume he's smarter than me. So so just got to kind of keep up with the trends.
Yeah, he saw an opportunity there, then most likely. Or he just got tired of him. I'm out of SMU. I'm gonna start my own university. Yeah, too many red flags, right? Oh, the school. I'm not saying, I don't know. I've never been to that school before, but yeah, no, absolutely. So what are the, I have one more question for you, and that is, what is something that you want the audience to know about yourself or, the firm? the family office firm?
Yeah, so Summa Monde Capital, we continue to invest. We're looking for good partners, industrial, multifamily, basically land plays where we could take land and get it subdivided in high density single family homes. And also we have a wealth management company, so we can bring on retail investors who typically like to invest alongside of us. And so, we would make a great capital partner, and we're looking for, partners who are experts in their field, whether that be hotels, industrial, and etc. So, yeah.
I know you talked about hotels in the past, so you had experience in that hotel acquisition side things, Tell us a little bit about that, man, before, because I'm interested in that one.
Yeah, so hotels is a very kind of like a exciting and sexy place to be. But I will kind of forewarn you guys that for example, my old firm, Greentown, they're headquartered in Hong Kong. They're the highest end luxury developer in Asia. So they're partnered with Four Seasons, and so wherever there's a Four Seasons, Greentown builds the condos. The condos made money, but the hotels, not so much, because basically they have a high reserve for investors. So it's hard to make money. It's great for people who stay there, though. And I will say, in the U.S., I had a kind of a dream job of kind of visiting all the resorts, including in Indian Wells, and had a deal there. So, it's very niche, and you kind of have to know the players. But we're kind of staying in our lane and kind of being more conservative. So we're going to be probably doing 3-4-star hotels locally here in Houston, and it also falls under a opportunity zone, which it makes things tax free, and then a historic building where you can kind of get your money back through tax credits in 3 or 4 years.
Right, absolutely.
We're actually on the verge of closing a small hotel fund. We've bought 3 limited service hotels, and we're it's all equity. So we're not putting any debt on them for acquisition funding at all. So
definitely cool. Yeah. So Barry, I want to say thank you so much for your time. Definitely thank you for sharing your knowledge, your expertise, your knowledge, everything. And definitely it's something that the audiences will look into, because I think that investing in land and developing it, right, especially in areas that are growing, it's definitely a good insight to have, right, and make your money work for you. So Barry, thank you so much. And for you guys that have been watching, thank you so much. Make sure to share this video and subscribe to our newsletter. All right, till next time. Thank you.
That's a lot, guys.
Thank you, Barry.